in times of, say, a recession or economic uncertainty, that's actually a prime opportunity to test, develop, strategize. We had some of our biggest growth years during, I mean, we were hitting 65% revenue growth years some of those years, right? So to your point, many people were quitting and leaving the business, but we've actually entered the multifamily space candidly at one of the sort of quote unquote worst times to get into it. But the reality is it's the worst time for current owners, right? So we can go back and look and see what did they do and why did they end up in a situation where their deal is now no longer cash flowing or they owe more than their, and how do we avoid that?
Hey, good morning, well-to-lead family. How you guys doing today? This is your host, Bobby Davis here. Hey, listen, folks, I appreciate you guys taking time out of your busy schedule to join us today. We have a special guest in our studios this morning. John, how you doing today, sir?
Bobby, I'm doing wonderful. We were just catching up before the meeting. We're kind of not too far from each other, being in Atlanta and Charlotte. So it's like we're having that weird weather where, like, a couple weeks ago it was 30 degrees and now it's like springtime. But I'm happy the sun's shining a little bit and going to take advantage where I can. But things are going great, Bobby.
There you go, man. It's hard to figure out what the weather's going to do, man. We just make sure we
I
carry
know
a
it.
coat with us and, maybe take the coats off in the afternoon, back to short sleeves. So it's just kind of hard to figure it out. But yeah, man, listen, I'm truly excited, man, to dive into our discussion this morning with you. Obviously, you are a huge leader in the real estate space, and we're so excited this morning to find out more about what you do, especially as it pertains to real estate, commercial, multifamily real estate, and investing. But just before we get started, maybe you can tell our audience a little bit more about yourself and kind of how you evolved into what you're doing today.
Yeah, absolutely. So, it was interesting. I had started at Florida State and, I was sort of somebody who could kind of coast through high school with A's and B's, and sometimes use a little bit of charm to, get a C up to a B, right? And kind of rude awakening when I got to college and really looked at like what true study skills look like. And so after a few years, I came back home and the intention was to finish college, but it was interesting. I met, my now wife, we've been married for, 21 years. And a couple of my friends that were a few years older got into real estate out of college. And so one of them just said, "Hey man, I'm working at this company in downtown Atlanta. You should check it out. It's a lot of fun." And so I sort of stumbled into it. And the idea was like, well, I'll just do this until I figure out what I really want to do. And very quickly, I fell in love. I mean, at the end of the day, it was residential real estate sales. So just working with buyers and sellers. But pretty quickly, I recognized that there was an opportunity where, candidly, and I don't want to disparage an entire, sort of sector of work here, but,
Right.
there is a reputation that is sometimes earned amongst real estate agents. I think sometimes unfairly, right?
Absolutely.
There's, sort of a thing that's coded, but personally, I dealt with agents that were working 3 jobs and this was like a side hustle and I can't get them on the phone for 2 days and we got a major issue. So
Yep.
kind of that
Yep.
idea of service can really distinguish yourself, right? If you just do an exceptional job with communication, don't dodge those challenging situations, lean into them, that solution oriented approach. And so after a few years of selling, the Great Recession hit. So I was about 5 years in and then boom, '07, you started really something's wrong here. And then '08, it was like my income was cut in half. But fortuitously, I connected with a guy named Mark Spain who had a real estate team. And I reached out to him largely because in 2008, he still had billboards up around Atlanta advertising his services. And I said, well, if he's spending money on billboards, he must have business. So let me
Yeah.
see what he's up to.
I'd be doing something. Yeah.
Yeah, that's right. And so we ended up hitting it off. And, within about 6 months, I was still selling, but he asked me to help support build out like a buyer team to kind of grow the buyer business a little bit. And then incrementally over the next year or two, just more and more leadership and management responsibilities were layered in to where by about 2010, I was at the time director of operations. And what ended up happening is a lot of these single family rental funds started showing up, right? I'm sure you're familiar with like the Invitation Homes and America Homes for Rent, Colony Homes, sort of backed by these large private equity firms with the thesis that properties are trading at an exceptional value, like below replacement costs at 60 and sometimes 50%. And so their thesis was if we buy a lot of properties, rent them out, and then as the market starts to improve and new building starts to commence again, it'll drag the values up of all these existing buildings. And that's exactly what happened. So that was something that really gave us a vision, number one, into how these big companies think, right? They came into town with very little of a plan. It was just like, we know what we want to accomplish. Let's build the train tracks after the trains left the station.
Right.
And so we were closing thousands of homes a year with them by like 2011, 2012. And so that kind of gave us this confidence to start thinking about expanding into new markets, which we eventually did into Charlotte, your market, Raleigh.
Yep.
Those were
Yep.
our first two expansion. And now we're all over the Southeast. And so long story short, we had a private equity exit in 2021. That was always the goal. And so after about 2 years, I decided to leave. And now I am in multifamily investment. We run a syndication firm raising capital from investors to acquire underutilized or undermanaged or perhaps just dated properties. And then we work to improve those, driving additional net operating income, thereby creating value for our investors. So, yeah, if you'd asked me at 18 or 19, real estate, it wouldn't even have been on my radar. But now my whole career has been in real
No,
estate,
that's
and I absolutely love it.
I know that's what's so amazing, John. You stumbled into it and you've actually done some incredible work in this space. And when you talk about the crash, I know the crash knocked a lot of people out of the real estate game altogether. So it's
That's right.
amazing how you guys were able still to kind of transition through that difficult time. Now, you've been doing this a long time,
Mhm.
and obviously we know that there's intrinsic reward that can be garnered from doing real estate and doing it at the level that you're doing it at. But is this to you, does this feel like a calling or a passion that you have? I mean, you've been doing it for so long, or is it just, you're just moving into this space and it just kind of was a good fit for you? Maybe tell us a little bit more about that.
Yeah, I think what I realized is that, I was in real estate, but at the end of the day, it's business, right? And we treated it like a business, right? Now, some real estate agents maybe don't have a business plan and they just, hope to grab a few leads here or there. But I think it was really understanding that, a few things, right? If you run a tight business where you're minding your expenses, you're thinking about, kind of your sales funnel, you're thinking about the client experience. So in other words, what I do, I tend to think could be applied to really a large
Any
variety of
business.
industries,
Right.
right?
Right.
Now, if you
Right.
said, for example, biomedical technology or something, yeah,
Yeah.
perhaps that would be a bit of a stretch, but
Right. Right.
just it really came down to that. And so the passion really came into being an operator. Like that's
Okay.
what I really learned about
Got it.
myself.
Got it.
And sales is a big part of that because to be an effective salesperson, in my mind, you have to be strong at empathy, building relationships,
Yep.
listening, right? Problem solving. And a lot of those things are the same things that can make you really good at leadership. Now, interestingly enough, we all know sometimes that idea of taking your top salesperson and turning them into a leader often backfires.
I know. It
My
sure does.
passion yeah, 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 but the passion kind of actually developed once I realized I just like operating businesses. So thinking about like '08 and '09, scary time, but we really just sort of took that, I guess, emotion that we were experiencing and channeled it into action, right? And so we're not gonna just sit here and just make the market an excuse, right? So, I didn't mention this earlier, but in '08 and '09, the majority of homeowners were underwater. So we pivoted into short sales. We just like, we have to change. We can't just keep doing things the way we used to do them. And so the big opportunity and lesson there was like, in times of, say, a recession or economic uncertainty, that's actually a prime opportunity to
Yep.
test, develop, strategize. And we had some of our biggest growth years during, I mean, we were hitting 65% revenue growth years some of those years, right? So to your point,
Really?
many people were quitting and leaving the business, but
Yeah.
we've actually entered the multifamily space candidly at one of the sort of quote unquote worst times to get into it. But the reality is it's the worst time for current owners, right? So we can go back and look and see what did they do and why did they end up in a situation where their deal is now no longer cash flowing or they owe more than their, and how do we avoid that, right? So, quick example, many operators were doing floating rate debt. We only do fixed rate debt. That's a lesson we said, you know what? Because we've seen it happen before, if the deal doesn't pencil with fixed rate debt, we're just not doing it. So there's lessons you can learn in those time periods, but once again, it's also an opportunity to test and iterate and try new approaches, right? And so, I actually like those challenging times. I'm almost like a glutton for punishment in a sense where it's like, give me a challenge, right? And that's when I activate.
I think to be an entrepreneur, you got to be kind of like, the a risk taker, and you certainly have to be not pain averse. In other words, you're gonna have some pain in the process, right? And if you don't want pain, entrepreneurship is probably not the path to take. But
That's right.
your story is so interesting, and there's so many components to this that I want to see if we can unpack for our audience. Because I mean, your transition from Mark Spain to what you're doing right now, those are two pockets I want to peel back a little bit more. But I wanted to ask you, like, for maybe real estate agents, mortgage professionals, people that are coming into the industry right now, okay, and sort of like let's just say stumbled into the industry, sort of like you did, right? And you turned this into an incredible business, and you scaled it. What would you consider to be, from your perspective, some of the fundamental principles that need to be adhered to when you're first starting a business? Because I'm sure you learned a lot as you went along, but there were some things that you started with that kept you going. So maybe can you tell us about a couple things that you thought maybe stood out to kind of help you transition into this space and be successful in it?
Yeah, I mean, I think number one, particularly when it comes to say being a mortgage broker or real estate agent, right? Having a strong economic drive, right? Because these are commission only roles, generally speaking. Now, I know some mortgage, bankers may have some slight small salary depending on the structure. But, understanding that, you have to have that kind of self motivation and drive to wake up every day and to do the work because you're not getting a paycheck. And, understanding that, right, that economic motivation comes in. And so that's where I see a lot of agents fail. They sort of get their license and just expect the phone to start ringing.
Yeah,
So having a business plan, right, and really thinking through, like, do I have a network that's large enough that I can work, right? And I got into this business when I was 22. So the answer was no. I mean, the majority of my friends were either still in college or just graduating. So theoretically, they weren't looking to buy their first home maybe for 3 to 5 years. And so, what is my business plan? Like, am I going to get this business, right? So that could be social media strategies, that could be things like pay-per-click advertising. But when you're just getting started, you don't have money, right? So,
right.
not being afraid to pick up the phone. We used to call it black cord fever, right? Some people
Yeah,
just have that, they say, I don't want to pick up the phone,
I
but
know.
that ability to follow up, call, and then, follow through once you have those initial conversations, right? So, yeah, it's, I would say what I've experienced, at least when I see agents that fail, is they don't have a clear why. They don't have that, defining definition of like, what am I hoping to accomplish here? And they don't necessarily have that strong business plan. So,
Mm,
I'm a big reader, as you could probably see behind me.
yep.
So when I first got in the business, I started reading books on sales. I mean, all the way back to the Zig Ziglar stuff, frankly, I think sometimes
Yeah,
the older stuff's the better stuff, right?
I know, right?
Zig Ziglar, Dale Carnegie, like How to Win Friends and Influence People, reading books like that. And then once again, for me in real estate, looking at people like Gary Keller, who wrote books on, how to build your business. And, Mike Ferry, for example, he's not so much of a presence today, but back then he was a coach. So I went to a number of his seminars and learned some outbound outreach strategies where you could follow up and develop business with people unknown to you, at no cost, right? It's just my time to pick up the phone and make those calls, right? So, yeah, right now it's a very challenging time for residential real estate, as you and your listeners probably know. Interest rates have moderated a little bit, and frankly, this is the new normal. I don't think we'll ever see 2 or 3% interest rates, at least in the next, I'd say foreseeable future, but probably the next 10 years. On average, they sell about 7 million homes a year. Right now, we're averaging about 4 million a year, right? So there's just
Mm,
less business to go around. So you once again have to have a clear plan, clear vision, a clear why, and that self-starter mentality of just waking up every day and doing the work. I mean, I would say real estate to me is like a 60, 70, 80 hour a job,
yep,
hour a week job, right? If you don't
yep.
think that that's for you, then real estate isn't for you. Let's just put it that way.
No, yeah, I completely agree with you. And as you're talking about this, John, you're actually highlighting what some of the steps that would be necessary are things that you need starting any business.
Yeah, that's it.
And like you said earlier, I mean, it's almost like you could apply this to almost anything, right? Because I think what happens too often for entrepreneurs when they start out, they have this ambition, this drive, this energy, excitement, and all of this enthusiasm. And it's the same thing when real estate agents, they get excited, they just passed the test, now they got the real estate license, but they don't have a plan.
That's
And
right.
they don't have, more importantly, a strong why. Why am I doing this? What's the motivation behind it? Because you're going to need to lean into that as you have to transition through some difficulty that you're probably going to encounter through the transition of working in that space. But I like the fact that you were able to simplify that and just give us some real down to earth steps that people can take when they're starting out. Now, as it pertains to what you're doing now, so you learn these things as you started or transition into the real estate market, but you're into capital investing now. Can you tell us what that is and explain to our audience what it is that you're doing now in that space?
Yeah, absolutely. So, about in 2012, the SEC changed the rules a little bit and allowed for what we call like syndication investing. And that concept was out there, but it was very restrictive. And so basically what it means is, we can there's different regulations. So there's sort of friends and family where there's fewer regulations, but if you're publicly marketing your deals, which we are, a little bit heavier on the regulations. And basically what it allows for is, for example, as an individual, and even if you're doing really well, making a couple, three, $400,000 a year, maybe you have a few $1,000,000 in the bank. The reality is you're not going to be able to go buy a, 50, 60, 80, 100 unit apartment building on your own. Right? And
Right,
so
right.
the idea is we're basically the syndication, right, is a syndicate. It's a group of people coming together with a common purpose or goal. And so basically the idea is we as a company go out and we identify buildings that, are missing something. Once again, the units may just be dated and, we call them classic, but just the amenities might be tired or there might be a lack of amenities. What we also like to see, candidly, is like poor management. So like bad reviews. So
Mm,
kind of going in and saying, okay, number one, we can add value through, enhancing the amenities and the quality of the units. But number two, and actually this is more important, is we can just install an exceptional team of people at the property level that care about people, that understand that these are human beings, that they have empathy for these people. So, first class service on that side of things actually is one of our biggest drivers of net operating income because
right.
at the end of the day, if I sign you up for a lease and you stay for 12 months, but then you say, man, I was treated poorly, it took you 6 days to fix a maintenance request or whatever, you're going to move. And now
Yep,
I've got a down unit for a month and I got to do some make ready work, replace the carpet perhaps, or repaint it. So if I can keep the residents happy and accepting rental increases on an annual basis because they're perceiving value that we're providing, then I'm looking after the bottom line, right? So we kind of think about it like Southwest or Costco, right? Like hire really great people that'll
yep,
take really great care of the customer. And then the customer in this context being the residents takes care of the investor, the shareholder. But that's basically it. We go out, we find the deal. We know, okay, we've got to raise 12 million in capital. We take it out to our database, our current investors, and then we advertise. We have conversations with those investors. They buy shares in the investment. And so basically, it's like owning shares in a company and why I think our investors like it. And this is really a diversification play because at the
mhm,
end of the day, if you have all your money in the public markets, especially today, I mean, I think we're in an AI bubble, number one. Eight
yep,
companies are like driving like over 50% of the stock market returns.
mhm,
And, you can find today a guy could tweet something like an influential person and a stock could go down 20% the next
mhm,
day just because one guy's opinion got, viral or whatever. Where in this context, you're investing in a hard asset. So if you're buying in the right market in the right area, it's not to say they're recession proof, but they're more recession resistant because ultimately we're investing in housing, which is a core human need. And so that need will never go away. And on top of that, add to that, we have a housing shortage in the United States. I mean, depending on who you ask, we're anywhere between 3 and 6 million shy of single family homes just to keep up with current demand. And because of the interest rate environment and materials costs, labor costs, I mean,
mhm.
I'm not trying to get into politics here, but the tariffs and the
Yeah. Yeah.
enforcement around immigration is
Yeah.
driving up labor costs and materials costs.
Yeah.
So
Yeah.
our thesis is that it's going to be very difficult to build affordable apartments going forward. So by buying a really, say tired Class B apartment, turning it into an exceptional Class B apartment, we're going to offer a value compared to say that new development down the street that just because of the sheer cost to build is going to have to
Yeah.
charge $400 or $500 more a month in rent than we are.
Wow. Now
Right.
that's a pretty amazing strategy that you guys have at your investment firm there. And it's interesting, and I'm glad the way you explained it, right? Because it's interesting, like we see here in Charlotte, there's a lot of new construction in that multifamily space. We see them popping up like all over the place, right?
Oh,
And
yeah,
I'm sure it's costing a lot of money to build those, right? In my eyes, it seems to be a huge demand for multifamily,
it
period.
is.
And it's interesting that you have a concept or a strategy that involves around looking for properties that you can find, I guess, some weaknesses in that you can leverage and use to improve, to be able to give people an opportunity to invest in, and you are acquiring properties that way.
That's right.
Now, let me ask you this, John. So, as far as the process of acquisition, how challenging is that to find those properties that fit that criteria that you're looking for, that you know it's going to hopefully yield a return for your investors?
Yeah, so it's interesting. We look at that number daily. At this moment, we have to get 300 deals sent to us to find one that we submit an offer on.
Okay.
300 to one. Now, part of that is we're sort of limited in a sense to how much capital we think we can raise. And right now, we're very comfortable up to 14 million in capital because we
Okay.
we typically have 60 to 90 days to do that, right? That will change over time. We have repeat investors, they're upping investment amounts, but we don't want to take down a deal. Like we've closed 100% of the deals we put under contract. And that's
Okay.
critical because these brokers, especially right now, aren't closing a lot of deals. So if you tie up a property for 120 days and don't close, these guys like Colliers, Berkadia, Cushman, all the big national brokerages have weekly calls and they talk about the wins and they talk about the losses. So if your name
Mhm.
gets broadcast out there to every broker in the nation at
Right,
Berkadia
right,
that
right,
and these
right.
guys, they didn't close, right?
Yeah,
Now all of a sudden our
yeah.
reputation. So because of that, we're somewhat limited in terms of deal size. So right now that's about 150 units or less.
Okay.
So I share that because a large percentage of that 300 simply might be 400 unit buildings, or they might be 60s or 70s vintage, which we don't buy. We like 80s, 90s, and early 2000. So our buy box, right? So many of those deals are just outside the buy box, but even within the buy box, there's sellers that bought at the peak of the market and the value of the building's down 30%, but they still want that value. So in a sense,
Mhm.
they're in fantasy land. It's just it's a very, disciplined approach where just every day we're underwriting deals and underwriting deals. And when that one pops up, what we talk about is speed of execution. So the second we see a deal we like, we jump on it, we underwrite it, we tour it, we try to preempt the market by putting our offer out there quickly,
Okay.
clean offer. So very challenging right now, I'll say.
And all of your acquisitions are in the US. Are there specific territories that you guys focus on more so than others?
100%. So basically, we look at the pass of progress, as we like to say, but where are people moving? Where are jobs going to? Where's affordability better than, say, in other areas? So compared to, say, Los Angeles, right? Somebody living in Los Angeles might have to make $400,000 to have the same lifestyle that in Charleston, South Carolina, they could have for maybe 150,000 in income, right? So we like the southeastern market. So we currently own assets in Tampa, Florida, Charleston, South Carolina, and Metro Atlanta. We're looking at Dallas, Fort Worth as well. And then within those markets, you drill down into the actual neighborhood, or what we call the submarket. And so I want to see at least 5% or more population growth projected in the next 5 years. I want to see rent to income ratio. So the average and median income should be no more, that rent to income ratio should be no more than 30% after we renovate the unit.
Mhm.
35 is sort of the standard, but we go to 30 because just conservative and just can people afford to, what we're
Right.
trying to do here, right?
Right.
And then we look for economic diversity. So, Myrtle Beach is interesting because there's a lot of population growth, there's some good affordability, but because it's a tourist driven market, where Charleston has a big tourism component, but there's defense. One of the biggest ports on the south is down there. So you got transportation, logistics, a lot of manufacturing jobs. So if one segment of the economy is, in a recession or down, there's all these other diverse employers that we can lean on. So I'll use Detroit. It's kind of that extreme example, but whenever
Right.
the car business has issues, Detroit has issues. So
Yeah.
even
Yep.
though right now you can buy homes in Detroit for $60,000,
Yeah.
probably would be a good investment. It's just there's too
Yeah.
much risk, right? And
Yeah.
so economic diversity would be one of those other critical factors.
Okay. All right. Got it. So you guys, how you have a blueprint on how to do this, and
Yeah.
now when it comes to, is this a long term investment, or is there an end date to these that you guys cash out and move on to the next deal? How does that work for the investors?
Yeah, so our typical hold, so our documents, it's a 5-year hold. Now, we do have an optional 2-year extension if just say, for example, cap rates are high or there's something happening, going back to the pandemic, who can predict that, right? As I've gotten
Right.
older, I'm
Right.
44, so I'm not too old, but I've learned nobody can predict the future and largely people don't know what they're talking about, right? I mean, look back at '08, it's easy to go, well, all the signs were there, but everybody seemed to miss them except for a handful of people. So, knowing that, it's like, okay, so we want to be, have that option there. But candidly, internally, 3 to 5 years is kind of our goal. So get the investors' capital back as quickly as possible. But they are, I would say, medium term. 5-year hold. So these are not liquid investments. In other words, you can't put money in and redeem it. You're in for that
Right. For that
investment
duration.
period.
Okay.
And we're typically targeting somewhere between 18 and 20% annual returns on our investments. And that's another reason why we're only getting one out of 300. We could do a lot of deals at 14 and 15%, but we want to provide exceptional returns to our investors, right? And
No,
so
that's actually a pretty good return. I mean, I'm kind of shocked at that actually, but no, that's I could see why you have to weed through so many to find the right ones that can yield that. I mean,
well,
that
let me give you a quick example. So we bought a deal in Largo. It was our first deal. The average in-place rents were $1,200. A good operator owned it. They owned a building across the street, but they owned a lot of properties and we were looking at just what market rents for that unit should be. And it was around $1,400. So they weren't, maybe aggressively enough, raising their rents. And so we come in and for example, we could take a 2-bedroom unit, put $15,000 in upgrades into that unit. Remember, $1,200 in place rents average, but those 2 bedrooms are probably like 1350, right? We're getting 1950 for those units after putting 15,000 into them. And then in addition, we can say, okay, right now, the resident has to haul their trash to the dumpster when their trash can is full. We institute valet trash. So a company comes through, they take the trash twice a week to the dumpster for the resident. The resident just
uh,
simply places their bin outside their door. They charge us $20 a month for that service. We charge the resident $40 for that service. Residents absolutely love it, but that $20 is just straight to the bottom line, right?
right,
And so
right,
that's driving that NOI. So we look for things that would add value to the residents. Another good example, first floor units. We fence in the backyard, create like a little private backyard,
yeah,
and your
yeah,
dog
yeah,
might people pay $50 a month for that and just some
yeah,
fencing
yeah,
material, right? So you say, how can I make this a better living situation for the resident while also driving that? So that's how you can get those returns, but you have to execute, right? Because everything on paper is great, but it's in the execution, the business plan
yeah. You're
comes
right.
alive.
You're right.
Yeah. Yeah.
So, I mean, this is so interesting, man, because you started your journey going back to, the beginning here. You started in residential where you were focused primarily in residential for a minute, and then you transition into the commercial multifamily space. You have this, it sounds like you have this really great investment strategy. How did you learn or transition into the multifamily space and be able to pick up all of these things that are necessary? Like
Yeah.
just some of like the simple things that you just said that most people probably wouldn't think about, like providing value add just in garbage pickup, or putting garbage cans out there, something like that, right? How did you learn this?
Yeah, so it was interesting when I left Mark Spain Real Estate. I had this mastermind relationship with my current business partner I mentioned, and so we just had a scheduled call. And so I was like, "Hey, got some news to share with you." And we talked for about an hour, and then he text messaged me a couple of days later, said, "Hey, I got an idea I wanted to run past you." And he was already contemplating this business because of that pain I shared earlier, where he's like, "I can't even find investments in Canada." So to answer your question, we had a few conversations and I said to Mark, like, hey, I'm leaving like this 20-year sprint I just did with this other company. I was kind of thinking about like taking the year off and just decompressing. Now, candidly, about a month into this, year long thing, I was getting pretty anxious and bored. My kids were at school, my wife's working, and I'm like playing video games and going on hikes. And I'm like, all right, this kind of sucks. Like, I need a job.
Right.
Like, I'm an action guy, like, I just it seemed cool in my mind, but the second it
Yeah.
happened, I was bored very quickly, and boredom
Right.
is not a good thing for me. So, what I did was I said to Mark, like, "Hey, like, this is happening pretty quickly here, and, before I commit, I just I need to have a better understanding." So, he actually recommended a few books. In fact, Joe Fairless is a guy who we've developed a good relationship with. He runs a business called Ashcroft Capital, but he literally wrote a book just called The Best Ever Real Estate Syndication Book, and that book is just a blueprint for what we do, and it's
Wow.
incredible. I mean, and we effectively are sort of just following his plan. Now we've added in our own kind of special sauce here and there,
Yeah. Yeah.
ideas we
Yeah.
brought from our prior businesses.
Yeah.
So that's number one. And then number two, we actually went to a conference together. So I spent 3 days surrounded by people doing this kind of work, and I'm listening and I'm
Nice.
hearing about the
Nice.
challenges and
Nice.
everything from resident experience to underwriting deals. And what I observed there, and this is not once again to disparage, but it's the sort of the same thing with real estate. Now I've just learned it's just in business, right? There's going to be what maybe say 10-20% of businesses that are just exceptionally well run, tight
Yeah.
execution. There's a big chunk of average, and then there's probably 10 to 20% that are just terrible,
Hmm.
and just no good, right? And so I was seeing opportunity just hearing as people were talking, and I'm like, man, the way they're talking about residents is almost like with contempt. It's like, and I'm like, what if we treated residents really well, right? And so
Right.
that was part of it. But what I learned from Mark Spain Real Estate, and candidly, the majority of our success I'll attribute to is the team that we built, right? Like once
Right.
we got real clear on a strong hiring process. I mean, our hiring process for a senior leader at Mark Spain Real Estate and Faris Capital Partners could be 7 or 8 different interviews. I mean,
Wow.
and we tell people on the front end, but like we're locking arms. Now, if we're
Yeah.
hiring an admin, maybe it's two or
Yeah. Yeah.
three,
Yeah. Yeah. Yeah.
right?
Yeah.
But
Yeah.
it's like, really making sure we're finding the right person for the right job. So their behavioral, kind of attributes need to match the role. Their resume needs to match the role. But, the values, right, are the most critical component. So our values are genuine love of people, make wise choices, first class service, operational excellence, and speed of execution. So I'm
Love it.
asking a lot of questions, open ended questions. Are these people or is this person, do they live our values? Because I can teach you the job. I can't teach you to care about people. Like
That's
that's
right.
either in you or it's not, right?
That's right.
So that alignment. So very early on, before we even had our first deal, we hired a asset manager with 20 plus years experience. We initially hired an analyst, but quickly realized, no, we need a senior acquisitions person. So we built the team before we even had our first deal. So effectively, we surrounded people ourselves with people that were smarter than us about this
Yeah.
stuff,
No,
right?
that's the key, man. And one thing, and I think our audience probably is picking up on this during this conversation, John, is a couple things that I've noticed about just some of the things you've shared. First of all, you are you are real big into self-development. And I
Yes,
think that's very critical and very key. I noticed in your bio that you average about 40 books a year that you read. So you're an avid reader.
I am.
And now all of this comes to the surface, and you can see this and hear this in this conversation that we're having because you have went from one spectrum of real estate to another spectrum of real estate, and they're different in many ways. But
Yes.
where you're at right now, it's probably a bit more complex than just going out and selling a residential property. And it's amazing to me that, you've transitioned into this, but I try to pick up on those undercurrents there that says, what is it that makes this person special and what makes them, really exceptional in this work? And I see the personal development that you take and just making sure that you are immersing yourself with the information and you have this willingness to commit yourself to reading, which I think is a lost art now. I mean, with ChatGPT and everything else, I mean, immersive reading has declined over the years. And we
For
rather
sure.
get, ChatGPT to scan a book or give us an outline of a book versus sitting down and actually taking time to discipline yourself to read. So I think reading is absolutely crucial to a lot of what we want to do in life from a knowledge standpoint, right? And then
Absolutely.
the other thing I picked up, you you surround yourself with successful people, so your environment was critical.
Mhm.
And these are all things that I wanted to bring up, especially to leaders and helping them to realize that first and foremost, we have to take our development, our personal development. We have to be in charge of that. That's a commitment we make to ourselves, right? And we have to be consistent in that. And then we have to be in the right environments,
Yeah.
surrounding yourself with people who are smarter than you are.
Yeah.
And you've said all of that, right? And in one way or another. And I just wanted to highlight that for our folks that are trying to learn some things as far as leadership principles from this conversation. But let me transition to something else that I wanted to talk to you about before we finish up. You've accomplished a great amount of things and you've been very successful in business and you went through some hardships, difficulties. You transitioned through the great crash of '08. I mean, and came out on the other side. So you've seen some stuff. How do you balance your business success with life?
Yeah. You know, it's interesting. What I found out, at least for me, is that, the idea of there's two separate things may be a bit misleading. In other words, I don't view them as two separate things. Like, I am passionate about what we do and I love what I do. So, and I know this may sound pat or cliche, but it's like it doesn't feel like work, like because I found
Yeah,
something that I really enjoy doing. Now, I
yeah,
also
yeah.
understand that that comes somewhat from a place of privilege, right? And, my dad actually grew up in poverty and he retired as the CEO of a Fortune 500 company. When I say poverty, I mean
Wow.
his dad was an alcoholic. His mom died when he was 8. He was raised by
Mm,
aunts and uncles, had to volunteer for the Vietnam War, because he knew he was going to get drafted. So he's like, I might as well, volunteer and get an assignment that I
right,
like.
right,
So he
right,
joined the
right.
Navy, so he didn't end up in the infantry or something. Watching his career and how he kind of progressed, that was hugely influential for me. But I think that, I did grow up in a middle class environment. And so I had a safety net, right? So it's like, I do feel like I have to share that. And, as a white, man in America, there's
Yep,
certain
yep,
privilege and
yep.
opportunity that comes from that. But what I found is that, you know, and I think I got this from Scott Galloway, who's a guy I kind of like. I don't agree with everything he says, but it's this idea of follow your talent, not necessarily your passion. Like, I'm passionate about
Mm,
films. Like, I love film. Like, I can watch certain filmmakers with the volume off because I just love the aesthetics and I'm thinking about the editing. But I know enough about myself because I thought about pursuing film that I'm like, I don't actually have that ability. Like, I love
yeah,
to read, but
yeah.
I know I'm not the kind of person who's going to sit down and write a novel, right? So my passions are music, movies, books, but I realize my talents are in operating, right? A business. It's sitting around
Good
corners, like
point.
understanding, like kind
It's
of
a good
like
point.
the fewest steps to get to a possible solution. Now, I don't mean to sound like I'm bragging, but that's if you ask people around me, they say that's what you're good at, right? And so once I figured that out, do something you're talented at, not necessarily something you're passionate about. And it's not saying, I heard Kurt Vonnegut say recently when he was very young, he's a famous writer, if you don't know, and he was like 19 or 20 and he was working some like farm job and he was talking with this older guy and he was talking about, well, I tried this and I tried that, but I'm no good at this, like music, arts and all this stuff. And the guy said, well, that's not why you do it. You do it because it's fun and you enjoy doing it. And he's like, that changed
Yeah.
his life, right? Because it wasn't like I have to
Wow.
build a career on this. I'm just doing it because I enjoy doing it. So look, I play music. I have a couple bands. I play drums. I'm taking jazz drumming lessons right now because I want to develop that skill.
Nice.
But by doing that, I think when I like shut down for the day, I don't have to take like 2 hours to clear my brain. I can just kind of walk in and start spending time with my family. So I think if you have that ability to really identify what am I talented at, find a role that you actually enjoy doing, and then understand it's going to be in waves, right? Like when we're in a capital raise, we're super busy, but we might be a month between deals. And so perhaps I'm only working 35, 40 hours during those weeks, just looking at our procedures and policies, checking in on our assets, doing a little travel. But then all of a sudden, a capital raise, we're super busy. So knowing in those moments where maybe that
Right.
season of the year is going to be a little quieter, taking advantage where I can. And I will say I have little strategies. I take a walk every day at lunch. I do a 4 mile walk every day at lunch. I do work out in the mornings
You
a few
said
days a
4
week
miles?
too. Yeah. I walk fast,
You
but yeah, I
said a
can do
little
that.
walk, right?
Yeah. But I will say this because we talked about self development. I think right now it's sort of this interesting thing because, if you go on social media too much, right, it's like there's all these prescriptions. It's like, oh, wake up at 5 a.m.,
Yep,
take an
yep,
ice
yep,
bath,
yep.
meditate for 16 hours, like whatever. And what I tell people is like, do what works for you. So I like to go to the gym. I go to the gym 4 days a week in the morning. I do my walks. That's kind of it. But that helps. Now that walk is thinking time. But what I've learned, and I've read a lot about this, is if you think about it, 150 years ago, every job was basically labor, right?
Yep,
And now we're all sitting at desks all day. And so we're not burning off enough energy, right? And so we've got all this reserves of energy. And on top of that, we're not at risk of dying like we used to be 150 years ago. I mean, 150 years ago, you were more likely to die by violent means than old age. And so you start
right.
looking at that and you go, well, what's happened? Well, now all of a sudden we're a little bit safer and secure, but you've seen depression and anxiety just skyrocket through the roof. And I believe a lot of that just has to do with just we're simply not just getting some of this energy out of our
Right,
systems through
that's right.
exercise and walking, or
Yep, yep,
running or whatever the thing is,
yep.
right? Or going for a bike
No, no,
ride.
you're right.
Yeah.
You're right. I mean, there's a wellness component to it, and I'm glad you mentioned that because you found time to be able to integrate that into your busy schedule, which is essential. And I think everybody needs to do that. They also need to be well rounded, right? Like, I mean, I see where you're into music, you're into film. These are things that you enjoy doing, and I just think that at the end of the day, you have to have balance, so you have to strike balance and find things that fits into your lifestyle,
Right.
so that you're not so that you're not bogged down. And what I mean by that, sometimes people like feel that, and I'll just use wellness as an example of fitness. Going back to the Instagram thing and to online, people are looking at other folks working out and saying, "Oh, I need to go to the gym and I got to do all these reps because I saw this other guy and I want my body to look like his." And you just get bogged down with things that you shouldn't be bogged down with, instead of just saying, "Hey, I just need to get to the gym. And if I can just do 2 reps or 3 reps, or if I can just get on the treadmill, whatever works for you,
That's
you
it.
go and you do that. But at least you are engaged in something that can help add value to your life
Yeah. One
in
of
a
my
nice
favorite
way."
quotes, right, is comparison is the thief of joy. So,
Yeah, there you
you
go.
know,
There you
yeah,
go. There you go,
yeah.
man. You're absolutely right. So listen, I did want to ask you about this too, John, before we finish up. Now, I understand that you ran some marathons and
Yes.
also you do a lot of hiking. So tell me about one of the experiences with the marathon. What type of marathon did you run?
So it was actually just a 26.2 mile marathon in Savannah. I did a couple halves and I did a couple marathons, and where that came from was honestly I was selling real estate in my late 20s, and I just started gaining a little weight because I was eating Chick-fil-A on the road, and
Yeah, all
the
that's
time
around fast food. Yep.
and it kind of started. I guess I always had fast metabolism, and I was like, I don't want to go buy new clothes, and I also had a baby at home, so I'm thinking, well, it's hard for me to get to the gym, so what can I do? So I just started the Couch to 5K program, and then something just clicked in my brain. I literally started dreaming about being able to run forever, and like I got the bug.
Wow.
And so part of it was, just necessity because like I didn't, as a salesperson and I had 5 appointments in a day. Well, I can get up at 6 and go run 5 miles and then still, have my full day ahead of me.
Yeah.
And then a friend of mine was in my neighborhood. He was kind of on the similar path, and so we started training together. So part of it was also that idea, like it just felt cool to say, like I did something that a small percentage of
No,
people
right.
have
Yeah,
done,
yeah, yeah.
And I will say, after doing a couple of them, I said, this I don't like. I'm done. My knee was bothering me. My Achilles was bothering me, but. Um, What I found about myself is, and I'll say it like, and I think this is true of a lot of successful entrepreneurs, is I kind of have an addictive personality. And
Yeah.
so when I was in my
Yep.
20s, in college, part of it is I was probably having too much fun. I was going out and drinking too much or whatever. And thankfully I had a kid at a young age and that kind of took care of that. But it's like I don't like sort of like things. I kind of, obsess about
Go to
things.
the
And yeah, yeah. And so I think that's the 40 books a year and like,
yeah, yeah.
some of these other things. And so, going back to that, that is true in my mind of a lot of entrepreneurs because their obsession, right? They want to like, achieve great things and they're like decisive and direct and they want, control over their lives. And so that sometimes leads to potentially negative consequences, but it could also be channeled into more positive things, right? I'm going to run a marathon and I'm going to figure that
Right.
out and make that happen.
Yeah.
Glad I did it. Never will ever do one again. Don't even have a thought about doing it. My walking's good for me now. But yeah, the hiking is also for me. It's I work from home, which is very great. I do appreciate that. But just getting that fresh air. North Georgia has some beautiful views, and it's interesting. When I walk, I listen to podcasts or audiobooks. When
Yep.
I hike, I don't listen to anything. I'm just in nature, just trying to decompress and just kind of like clear the cobwebs out of the brain, so to
No,
speak.
that's good stuff, man. That's
Yeah.
good stuff. Well, yeah, I mean, it certainly sounds like you spend time in that wellness space and helping to make sure you get out and do some form of movement and exercise and I think that's critical, man, for us to accomplish a lot of the things that we're talking about doing in life. Now, I would like to ask if you could do this for me and just maybe tell our listener audience, the best way that they can get in contact with you. Or maybe, let me ask you this, John. If someone was to run across a multifamily property,
Yes.
I mean, do you guys have a way for folks to kind of have do you have something on your website, maybe a criteria that you're looking for? I'm just curious because I mean, I'm out here, I see deals all the time. I'm sure other folks do. I mean, how do you actually get folks to send deals to you to look at?
Yeah. So if you go to fariscapitalpartners.com, we have our buy box, kind of our strategy outline there. But you can email me at John at fariscapitalpartners.com. That's FARIS capitalpartners.com. We always will look at any deal. We have a buy box, but we'll occasionally, if it's just outside the box, we might look at it just to see if it fits. But LinkedIn is a great resource. There's not many John Makarewiczes out there, so you can track me
Yeah,
down there.
yeah,
Perhaps you put it in
yeah.
the show notes, but that'd be another great way. But yeah, just email me, give me a shout, go to our website. You can book in a call that way as well.
Is there a minimum size deal? What's your minimum?
So we typically target between 50 and 150 units, but we'll look at 40, right? I said if it's just outside the buy box, we'll look at it to see if the investment thesis is there.
Okay. Okay. Got it. Got it. All right. So before we close out, if you could leave maybe some words of wisdom with our aspiring entrepreneurs or leaders that are looking to try to maybe get into real estate, or perhaps they're trying to be successful in scaling their business, what would be some things that you'd like to leave them with today?
I mentioned my experience in college, right? I never finished. And, another cliche, right? Education is wasted on youth. But as I've gotten older, it's like a lifelong pursuit, right? And so books, right? Reading books. Like there's so many great books on strategy. For example, like our meeting cadences and meeting rhythms at Faris Capital Partners, we just got from Gino Wickman. It was a book on he had these strategies like and kind of like how you should operate, these meetings to keep them tight and efficient and not have a death by meeting scenario. So, this is the quote that's often attributed to Picasso. It's not Picasso. I don't know who said it, but it's like a good artist creates, a great artist steals. And I'm not
Mm,
saying, in terms of creation, right? But everything has come before. There's nothing new under the sun, right? And so understanding that,
right.
just, increase your knowledge. If you're thinking about getting into real estate, there's probably 500 books, if not 1,000 books written on real estate sales. So do a little
Yeah.
research. And then you said this earlier, but that idea of you are the sum average of the five people you hang around with the most. So if there's an area of your life you're looking to improve and you're not getting the results you're looking for, you might have to step outside of your kind of current network and see if you can network and meet some new people, right?
That's right.
And then
That's
look
right.
for a mentor. I've always had a mentor in my career, whether that's just, Mark Spain, who was like kind of my mentor in the early part of my career, and then all the way to working with executive coaches as my career developed. But these are mentors back here, right? The people that
I
have
know,
done it,
right?
right? So
Yeah,
that's why that, I know I'm biased because I read a lot, but man, there's so much knowledge in there. And by the way, Audible, right? Maybe you don't
that's
want to sit
right.
in a
That's right.
for an hour,
Yeah,
but maybe put on
yeah.
Audible and go for a walk and
That's
listen
it.
and just,
That's it.
but all the
And
knowledge is out there. You just got to go find it.
no, you're right. And I think you encapsulate everything right there. But John, man, I tell you, I could continue to talk with you another hour or so, man. I know you got things to do. And so, but I really appreciate you taking time out of your schedule, man, to come on the Well to Lead podcast, and just, drop so much wisdom and insight today. And I'm hopeful that you'll probably have some folks from our audience that would be reaching out, maybe, to get more information on the multifamily investment opportunities out there. So
That'd be
thanks again,
wonderful.
man. I had a blast. I really appreciate all the genuine conversation we had today.
No, it was my pleasure, Bobby. Great conversation. And, perhaps we can connect for another one in the future.
There you go, man. Sounds good. Sounds good. Well, folks, that's all we have for you guys today. Certainly appreciate you all joining us. Until next week, you guys take care. Bye bye.